Alright, ladies and gentlemen, welcome back to the channel. We got some fresh information and data to go over with you guys. AMC stock not having a great day, but also not having its worst day, down about 4% on the day. We got this article to look at, we got the Ortex data to go over, the technicals, all of that good jazz. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section if you guys do have any. Now, first things first, we're going to talk about AMC, everything that is happening on the day, but first I want to get into some other things that you guys definitely want to know that is affecting the markets, that is also affecting AMC stock. So one of the big things that is happening here today is that the US will require airline passengers traveling from China to test negative for COVID. This is following Italy. This is following a couple other countries that are also doing this. This can put a dampen on economic activity, and that is not a positive factor on the markets. The markets were starting to accelerate to the upside at one point today. AMC was only down about 2%, and the markets, like I said, were starting to go up, not necessarily getting to positive territory, but starting to accelerate to the upside. Then this news came out that America is doing this, and it did send the markets down. It looks like we're going to close out the day at some of the lowest levels for the S&P 500 as well as AMC on the day. So that is not a good thing. This is following potentially a major catalyst coming tomorrow, which is going to be the initial jobless claims at 9:30 in the morning. Depending how this number comes out, if it's good, if it's bad, it's going to move the markets quite a lot, because this is really the only economic data that we are going to have for this week for the markets to react to, and it is the most important thing that the Fed is watching, hopefully trying to get to soften, which is the labor market. And the initial jobless claims will give us a read on, how things are going kind of after Christmas, right before Christmas. This will be initial jobless claims leading up until December 24th. So if you start to see this uptick in a big way, it could be positive for the markets in terms of the Fed getting, the labor market under control, right? As far as the Fed and tightening, it could be positive. It could be negative if this is really high in terms of global growth and the odds of a recession, right, in 2023. To see initial jobless claims going up usually is followed by the unemployment rate going up, the amount of people that are unemployed going up, right? And that would not be a good sign for the growth outlook in 2023, which it's weird in this market. Day by day, people are concerned about the Fed. They're concerned about economic growth. It's kind of one of those things where you don't know how the data will affect the markets, if it's good or if it's bad, because there's really a good bearish and bullish case for both sides. So that is going to be big tomorrow. As far as AMC stock here today, the biggest thing is obviously, as we reported in the last video, the fact that the live short interest of free flow is now almost at its highest levels that we have seen throughout 2022 at 21.5%. 111.2 million shares that are currently sold short, with cost to borrow rates that remain very, very high. Cost to borrow average at about 290%, cost to borrow max at 358.82%, and cost to borrow minimum at 209%. Live readings that we did get from interactive brokers at about 105%. So that is insane, and it's because people want to lend out stock of AMC. They want to short the stock, but there is very few shares available to be lent out, driving those cost to borrow rates up exponentially. So not necessarily a huge positive thing that the stock is down 4%, almost 5%, but at least the data does look good. So if we do get a positive reaction in the markets tomorrow based off of some of this economic data, I think AMC would be really in a good position to make an upside move. And I would obviously not bet the farm on that, but the data here definitely looks pretty dang good. And as we reported to you guys in the last video, we do have a massive option today that makes me really scratch my head, because it's so big. So almost a $50 million put order for June 16th, 2023. Now this put is super far in the money, and typically if you see a put like this, it's because somebody knows something, guys. This is, I mean, 5% of $1 billion. This is quite a bit going into one order, $49.01 million. It is 114,000 contracts. To see that on any expiration is a decent amount, right? To see the open interest on the Stonko tracker of 114,000 puts, that's quite a bit for any option expiration, let alone just one order. So it's interesting in that regard. Either somebody knows something, or this is a massive hedge covering up a lot of short interest, a very big short position, potentially trying to report that they have actually covered on their position by buying this option trade. That is actually possible as well. So there's a lot of different reasons why this is happening. Probably negative, right? It's probably not a good thing, but it does seem like there is a possibility this could be hiding a short position. They could be doing this to try to report that they have covered on their short position, because after all, it's a $6 strike. So if it's a put, it is deep in the money. Technically, they would have the right to sell their stock at $6 per share. It's trading at $3.85 per share. So you could technically go out and report that you covered on a massive short position, when in all reality, you have not. That's where some of the discrepancies between, how people should be reporting covering on short positions or not. That's why this can be a big problem, because $50 million could be a big problem, guys. So there is that information. That's some of the most important information here on the day. If we look at the Stonko tracker data as just a brief refresher for this Friday, you do have now about 6,500. Never mind. Let's go ahead and refresh that. Just did. Less than 1,000 calls in the money, and about 91,000 calls that are out of the money. About 45,000 puts that are in the money, and 26,000 puts that are out of the money. So not a huge week for option activity, but definitely if you get that upside move, you could see a lot of options on the call side go into the money that are not currently in the money. You have 90 times the amount of contracts that are out of the money on the call side compared to into the money on the call side. So to put that into perspective, that's a big divergence. And typically, if you see that divergence, you can get some of the strongest end of the week rallies that we have seen in 2022 have been caused due to this same thing. So obviously it depends how the economic data comes out tomorrow. If it's bad, it's gonna be pretty bad for the market. It's gonna be pretty bad for AMC. I'm not even gonna lie to you guys on that one. Now let's get into some of the technicals here briefly, then we'll wrap this video up, because not too much has actually changed here today. Markets did actually just close. So we did close close to the new 52-week low that was set at $3.81 per share. We did close at $3.84 per share, currently at $3.84.5 for those of you guys that want to get super technical on it. So we did not close at the 52-week low. We'll see what continues to happen here in after hours, and from where it sits now, this is really no man's land. Now, if we do have good economic data coming tomorrow, it's possible that we do rally back up to almost $5 per share, depending how good or bad the economic data is. That would be a rally of about 20 to 25%. So it's not like that's the base case here, but that was the previous level of support that we've seen for a long time. We didn't find much support at all around that level. So if you technically start to get this oversold in history, typically with AMC, you can see a sharp move back to that previous level of support, which would be around $5 per share. If all else fails, well, the next level that we'd be looking at is where we bottomed out back here after the January short squeeze effect, and that would be around $3.30 per share. We'll go ahead and actually mark that here right on the chart so we can hold ourselves accountable at $3.30 per share. If tomorrow is bad, that would be the level I would be focusing on, and that is the level that we were at before the January rally and the level we bottomed out after the subsequent fall of the January rally. So $3.30 going to be a critically important level. That would be a drop of about 50 cents tomorrow alone, so I don't think that is the base case scenario either, and it's really a toss-up on the economic data, guys. So there is all of that information. That is basically it. Volume still very low, sitting at about 18 million. Ape did not fare so well on the day. Also, we'll go ahead and pull that up and see. Ape was down 23.5%. To see AMC doing a lot better than that, definitely not a big shocker. That's kind of what we've seen. If Ape does good, AMC does bad. If AMC does good, then Ape tends to do bad. And overall today, a lot of stocks were down more than AMC. So I would say just comparing it to its peers, it was not a bad day for AMC stock, guys. So that is going to be it for this video. Super Kitty is out, baby. Hit that like button and subscribe to the channel. Thank you guys for watching. Enjoy the rest of your day, and I will see you in the next one.